Hey, folks, welcome to another Thursday. The week flew by. Crazy day. I see the comments here. Wild day. Yep, no doubt. Thomas, Franklin, Will, Seymour, NY Jets, Trader. Uh, yeah, and thanks. Please smash that like button. Yes. Thank you always for reminding me about that. I'm a bad YouTuber. I usually forget, not always. We have some requests. We'll go over those. We're going to go over uh, today's price action. We'll talk about the trade that we did in the banks and a real contrarian play, which is the airline sector. And we'll go over the chart today. We'll talk about the economic data briefly. And Trisha, hello. How are you? GDX is looking really good. Eric, hello. Good evening to you. MACD crossed over on triple Q daily chart to the negative. Is it critical? No, I think the MACD is more of a lagging indicator. I look at the Stokes and the RSI if I'm using indicators, but the primary two metrics that I look at are price and volume, then come the indicators. Unless, of course, I have an indicator like RSI is typical, which is flashing a divergence, meaning it's breaking out versus price action not yet quite breaking out of a pattern. So that's when I start putting a little bit more emphasis on the RSI in particular, not so much the Stokes. Stokes are more of a overbought, oversold indicator, which is it's used primarily for, but I like to use really extreme levels, and plus I like to use Stokes for divergences. So hey, TA, how you doing? PYPL's out there. All right. So let's talk about economic data really quick. The week has been not good. Monday, you just had some Fed heads out there. Tuesday, NFIB index came out. Not a horrible read, but not a great read. The CPI came out as expected. Inflation at the food level, but overall deflation is primarily the name of the game at current. We had Jay Powell come out, talk down the economy. The markets are pricing in negative yields despite his double talk. And today we had the PPI, more deflation. That was actually yesterday, sorry. And initial jobless claims, they came out about as expected. Neil Kashkari's been out there talking a lot lately. I think he was out earlier in the week. Yeah, he was. Neil Kashkari came out a few weeks ago, and he was talking about the banks were trading higher at the time. They looked as if they were going to break out. And he said, banks start issuing new shares. Your Q2 is not going to be good. So start raising capital because your loan loss reserves are not going to be sufficient. And they didn't do it. I thought they were going to drive the banks up higher, allowing them to dilute shares or issue new shares at a higher price. That never happened. They broke down. So let's get to the weekly charts. Let's talk about how we look on a weekly basis. But before we do it, I want to say that one day can make a difference, right? So the weekly charts may look very bullish or bearish tonight, but we know that it really matters how we close tomorrow because a lot can happen. So let's get to it. George, hello. Will, hello. Will, you have family from Valley Stream and Port Jeff? Know them both very well. Okay, let's go to the charts. These are the weekly charts. And some of them will be monthly. And we'll mess around in here a little bit. I first want to get bonds out of the way because a lot's going on in the bond market. Yeah, the Federal Reserve in there for the past 2 days, over $300 billion in bond ETFs were purchased. Do you wonder why the markets rallied back today? There you go. So the Federal Reserve has the back of the market. They are buying bonds, bond ETFs. I think it's HYG and another one, which Karen Finerman is still short of for whatever reason. I'm kind of surprised. So the yield curve, which was moving up higher until today, that all changed today. A big move lower, or a less of a move, a pullback on the steepening yield curve that allowed stocks to rally. If we drill down to a daily chart, change the time frame here. Look at this pullback over the past couple of days. So the yield curve was steepening. It's still early in the month. A lot can happen. Was steepening, now pulling back. And as it pulled back, stocks rallied. The bond market, the TLT. We were breaking down. We had a new weekly low. What happened? We have a bullish key reversal. Why? The Federal Reserve is buying bonds. Take a look at the apocalypse. That is the 10-year yield. Let me just update this, make sure it's refreshed. Yep. All right, so we had gapped up on the week to spot 7.4 on the 10-year yield. Look at how we closed out the day. We had broken out. Now we were at the lows of the week. So, how can you fight this? You can't. So we'll be looking to, we put on some longs today. We took off some shorts. We may be looking to take off more shorts tomorrow, depending upon how we close out the week. So the tip market, we'll leave off with the tips are off the lows of the week. And why does this matter? It matters because there's a correlation. Gold, the tips all correlate. They move in tandem. And gold, we'll go to that chart in a moment. It broke out on a weekly basis. Big move this week. So it can't be ignored. So the current bull markets are twofold. One, treasuries. You can't fight it. I have a short on. I'm going to take it off. Forget it. I'm not fighting it anymore. And that's using the TBT. I would not short the bond market. We are still short of the trip Qs, and we're probably going to take some of that off the table. We did book profits, though, in our short of the banks. We shorted the banks a couple of days ago, and we booked those profits. And we shorted using the FAZ, the leveraged ETF, putting you short of the banks. And we brought in about, I think, 13% in a couple of days on that trade. So a nice trade. But we didn't want to stick around because today, what did we get? A bullish key reversal, an outside reversal day. There's a very strong possibility that while we may pull back tomorrow morning, we're probably going to move up higher here. Now, is the sell-off longer term done with the banks? Probably not, because these lower yields are not good for the banks. The regional banks are getting killed with lower yields. So we close out the day today right at monthly support. So it's really critical that we do not take out the lows of this week. If we do, in all probability, we are breaking down and we're going to retest the March lows. A lot of weakness here. Back to the weekly chart. We're still rolling over on RSI, rolling over on Stokes. We're down below weekly support, but again, we're still holding monthly support. Volume is trending higher. So we'll see how we close out the week. Is today a short covering rally? It's quite possible. It happens. So we did not go buying the banks. We just covered shorts, made profits real. That's it. Now to the airlines. The airlines broke down below critical support this week and are down below another support level here at around, this is the XAL, at around 40, $1.69 is support, now resistance. We did step in today. We bought the airlines, and we plan on adding more if the trade begins to work out. We didn't go jumping in with both feet. We stepped up to the brook. We're taking a little sip of water like deers, right? We want to make sure there's no alligators out there. And we want to make sure that today's reversal bar, let's go to the daily chart. The reversal bar on the banks is for real. Now, the sector did not close up on the day, but when you take a look at names like LUV, which is Southwest Air, bullish key reversal bar, a very nice day. UAL, how did that close up? It did not close higher on the day. So we saw some reversals today. The reason why I'm interested in these names is for really no more than two reasons. One, I'm a contrarian, and everybody hates them. That means that I have to be interested because there's opportunity there. Now, the question I have to ask myself is, what's the catalyst to send these stocks higher? And the catalyst is they're so heavily shorted. So a lot of short interest out there, waiting to get squeezed. So we did step in. We'll add more if we see an opportunity. I don't plan on getting very heavy with the airline stocks. A lot of headline risk out there. I'm still nervous. So longer term, we're still bearish on the airlines. Short term, we see an opportunity here for a swing trade. We'll take some risk on tight stops, and if we get stopped out, we get stopped out. Small loss. We won't go averaging down. No averaging down. So airlines looking interesting. Hey, Oliver. AMD's on my list to go over. SDGR. All right, let's do a quick run through the major averages. Oh, before we go to the major averages, I want to talk about the U.S. dollar. U.S. dollar is so strong. We closed at, I think, 6-week highs today. Monthly chart, it looks as though we are blasting off. The only reason why I'm not even more aggressively long of the miners, gold, is because the dollar's so strong. They trade usually inversely of each other, although that hasn't been the case for the past few months. They've traded really, the correlation's been broken, but eventually they'll go back to having that correlation. In fact, I think that if the dollar weren't so strong, we would already be at all-time highs on gold, way past the 2011 highs. So the only thing holding gold back right now is twofold. One, deflation. Two, the U.S. dollar. And you know what? I'll throw a third out there. The fact that the Fed has the back of the markets, has money still rotating into stocks, that's keeping money out of gold, which would normally go into gold during times like these. The VIX, off the highs of the week, hammered today. The transports, weekly chart, hammered. No new weekly high, completely stalled out here. They have broken down below not one support level, but two support levels. Now, one of the owners of many railroads is none other than Berkshire Hathaway. And their chart kind of gave me a clue that this market was going to weaken up. This is Berkshire. Think about this. This is Warren Buffett's baby. And we're a stone's throw away from the March lows. Think about what this says, this conglomerate, the reflection of the American economy. Think about what this says about the economy as a whole. He's not a big tech investor. He's probably hurting right now because he's not, because that's where the money's been rotating in. But this is really a really good composite, a picture of where the averages should be, ex-tech. And in all probability, eventually, it's going to play catch-up with Berkshire. Why? China. This Chinese situation, I've been talking about it. We're short of China. We added more to our short of China. is only going to get worse. It's only getting worse. The Dow Jones, I'm not going to talk about that too much right now. Dow Jones weekly chart, down nearly 3% on the week, off the lows of the week. We did not hold the 24,000 level. Volume so far this week is going to come in at about the 3-month moving average. S&P 500 weekly chart. We did put in a new weekly high, but reversed. We gave up support at 28.92. We held support at 28.50. 28.50 is really critical support. Let's look and see how we close out the day on the S&P. And I want to pull back here. I want to go over the monthly chart to illustrate how accurate historical analysis can be. So this is a daily chart. Look at that 2800 level to 2850. Rock solid support. Volume rose today. Stokes is still weakening here. So one day, it doesn't get us out of the trouble that we're in. I think ultimately we are going to weaken up and probably move lower. But a good day. Score one for the Bulls. Now pulling back to a monthly chart. We spoke about this chart about 3 weeks ago. And I've spoken about it twice. And it goes back and it shows you how the 20-period moving average on a monthly chart has pretty much called each counter-trend rally for the past couple of bubbles. Back here in January of, December 2000. We had a counter-trend rally. Where did we stop? Right at the 20-period moving average. Fast forward to the counter-trend rally after the financial crisis. We rallied. We peaked out in May of 2008. Where? Right at the 20-period moving average. Fast forward to present day. We actually exceeded the 20-period moving average. Where are we trading at current? Down below it. So, it's amazing how history repeats itself, right? It's crazy. That's why I love charting. So let's take a look at the trip cues. And I want to talk about this for a moment because there's two ways to look at this. And when you're short, as we are, I don't want to put on rose-colored glasses. I want to look at everything through the lens of just being honest with yourself. And if you ask me what worries me about the price action on a weekly basis being short is the fact that while we broke out last week, I wasn't all that concerned. I did get concerned the fact that we did put it in a weekly high, but then we backed off. Now what concerned me this morning when I woke up was, and this is why I wanted to lighten up a bit on shorts, was that we were retesting the breakout point. So the question was, does it hold, right? Or does it break? So the trend will usually guide you and you say, okay, the trend is probably still going to be up here, so be careful. And sure enough, it held. Does that mean it closes above this support level this week? We don't know yet, right? One day can make a difference. Does it gap down next week? Who knows? We don't know yet. So we just want to be honest with ourselves. Take a look at our trade objectively, not hope when we should fear, and act accordingly. So the trip cues had a very good day today. Again, score one for the Bulls. Daily chart, bullish reversal bar. Stokes are rolling over. Looks like RSI recaptured support. Maybe? No, it did not. It did not. All right, so the jury's out here. We'll see. One day does not make a trend. Technology, weekly chart. We're on the verge of possibly breaking down below key support here on technology. Semis. We have broken support. We bounced off another support level. If technology goes, this market goes. So really we need to keep an eye on the semis, which are lagging the overall tech sector, especially the internet stocks. Really a disappointing chart here, not that we were long, was biotech. I mean, biotech was just ripping. This is the LABU, the leveraged ETF. Oliver, thank you, sir. Thank you for the super chat. Appreciate it. We moved up very, very strong this week. What happened so far this week? Big reversal candlestick. I mean, this is bearish stuff. So this is why, if you're looking at this market as an opportunity to invest in, wait until Friday. Wait and see how you close out the week, because that way you get an idea of the probability of how we're poised to close out the week. If you would have looked at this chart and said, you know, gee, let's, as a matter of fact, let's look at this chart from a custom view. Let's see if I could do that. 514. Okay. We'll go through the 12th. What are you doing to me here? 12th. Okay, let's see if this works. Let's go to a daily chart. Did this take? Sorry, folks, I don't do this often. Okay, so if you would have bought on the 11th, on this beautiful, beautiful candlestick, let's go to a weekly chart and see how it looked. The 11th was Monday. This is how the weekly candlestick looked on Monday at the close. So you look at this and you say, my God, you know, we broke out above 2 weeks worth of resistance. This chart looks spectacular. Now you fast forward and take a look at the weekly chart. Again, before I click the enter button, keep this in mind here. That candlestick, how good that looked. Look at it now. Horrible. So it pays to wait until Friday. If you're looking to invest, wait and see how you close out the week. If you're investing for the long term. What's a few days going to matter, right? So had you done that by today, tomorrow, in all probability, you wouldn't be looking at this as an investment any longer, and you would have spared yourself a few bucks. And if we would have closed at the highs of the week, the probability of us making new highs next week is pretty good. The odds of that, if you bought right now, improbable, highly improbable that we're making a new high next week. So wait until Friday before you invest your money. Energy for the intermediate term. Energy weekly chart. Bad week and inside week. We're holding support though. Utilities, of which we were long. We bought down here. We sold the rally. It's now pulling back. I like the utilities. I'm probably going to be looking to buy the utilities. So I would like to see a nice setup here. I like how we're closing out the week so far. We're defending the lower band of support, but the week isn't over. For all I know, we crash tomorrow. So we'll wait until the end of business tomorrow, make our decision, and we may pull the trigger on the utilities. Oil. I don't want to touch it. Forget oil. Emerging markets, I'm not interested. I am interested in VNM. The reason why I'm not interested in this chart here, EDC, because it has China in it, 20% China. Most of these emerging market funds have China in it. I want nothing to do with mainland China or Hong Kong for that matter. Vietnam is down on the week. I want to see a pullback here. Apple is already moving some of their production. We spoke about this chart weeks ago. I said that they will probably be a long-term beneficiary of the mess that China is making with the globe. And it's already begun. Apple's moving operations there. You can expect more to follow. Apple's also moving manufacturing out of China and into India. Let's take a look at India really quick. This is a daily chart. Bullish key reversal bar today. This is the EPI, Wisdom Tree India Earnings Fund. There are others out there. I'm just using this as a proxy. I might not buy this one, but ultimately, I'm going to develop a basket of ETFs of individual countries that should do well with the exodus, by law in some cases, out of China. You can expect pharmaceuticals by law will be pulled out of China. A lot of regulation coming down the pike that'll benefit India, Vietnam, Malaysia, Philippines, hopefully the United States as well. All right, gold. Gold on a weekly basis. I sold the gold miners and actually went short of the gold miners. Briefly, we stopped out really quick, small loss, in, out, done, because I made a mistake. So you need to be able to look at yourself, look in the mirror, and say, okay, Bob, you bet, but you bet wrong. So it's time to get back in with the gold miners, because gold on a weekly basis did break out. And if you're asking, why did you sell the gold miners? It was actually the GDXJ. I was concerned with the market beginning to break down. I was concerned about what happened back in February, March would happen again, meaning the markets sell off and the gold miners sell off as well, which is what they happened back then. I would not be shocked to see a divergence like we saw in 2008, but I was worried that we might not get that because the gold miners were looking weak. So, and the dollar was looking strong. So it looks as though that I got shaken out of the position. We're looking to get back in now. Definitely gold. Should we close out the week where we're at or better? Very, very interesting trade here. I think we're going up higher. The miners on a weekly basis. It's a breakout. It's a retest. It's a beautiful chart. Got to be long. Assuming that we close above this resistance level, actually support level right now. It's looking good. Silver, another area where we're looking to rebuild a position. We sold our silver position. We bought back here when nobody wanted it. And we sold right about here. Yeah, early April. And now it's beginning to pick up steam. So we're going to be looking to get back involved with silver. Beautiful price action this week. So those are the charts that we're using to guide our decision-making into the back half of the week and into next. Oliver, China ETFs that are disconnected from the U.S. market. Um, ETFs that are disconnected from the U.S. market. Can you rephrase that question? Anyone know of a good ETF to short China? Kat, we have one that we're using right now, which is Yang. Where is it? Here, let me just type it in here. Killing time. All right, so here's Yang. This is a leveraged ETF putting you short of China, so be aware of that. It's very, very volatile. So far this week, an inside week, no new weekly low. Daily chart. You know, it was up today. I don't like the price action. I really don't. We closed off the highs of the day. You know, the president was out there jawboning China again, threatening, telling the SEC or whomever, start looking at the Chinese stocks, rightly so. And it's ratcheting up. It's only going to get worse. So we're going to keep a leg in on the short side of China because at any moment there could an event occur. And we want to have a short exposure to China because they don't want to lose face. And President Xi is losing a lot of prestige over in China. And usually the only way for a dictator, which he is a dictator, the only way for a dictator to retain control is to create nationalism by creating a villain outside the country. And that villain is in all probability going to be the United States of America. So expect more headlines that are not going to be positive for U.S.-Chinese relationships. Okay. Tommy, tonight market will close. Stay careful if short ETFs. Okay. Rick Roofing, smash the like button. Yes, smash the like button. Thank God you guys say that. I always forget. Thank you very much. All right, let's take some chart requests here. I have a list already prepared. We'll bring up our friends over at TrendSpider. My spell check for technical analysis. You know, before I move on here, somebody asked me the other day about OPK. I was bullish on it. I remain bullish. It broke out this week. We closed out the day off the highs of the day. This is a daily chart, but it appears as though we're getting ready to close above weekly support. We won't know until tomorrow, but it's looking pretty good. Thanks, Tommy. All right, let's AUMN. Wow. I looked at this earlier, and it was up, closed down on the day. All right, so really no change from my last commentary. It's holding support. You need to see it close above 23, 24 cents per share. I mean, really nothing's changed here with AUMN. AMD. It's been a couple of weeks since we looked at AMD. So let's go to the monthly chart first. Look at that trajectory higher. Strong chart. A lot of resistance above remains at 57.92. Weekly chart. A good week. We retested 51.31. It held. We bounced. We've broken out on RSI. This is what I meant from what I said earlier with RSI. I use a RSI as a leading indicator rather than MACD. You're not going to get that with MACD. MACD is more of a lagging indicator, whereas RSI is a leading indicator. We're seeing a breakout here, but no breakout on price. So this makes me optimistic about AMD, assuming that the market holds up. We are off the highs of the week. Daily chart, looking good. You know, we close above this support level here at around, what did we close? 54, 53. Support is at 54.17. We close above that mark. I like the stock. I think it looks good. I think it could be bought. But really, the bulls are going to lean into this thing hard once you get above 58 bucks per share, because remember, that's where all of that monthly resistance resides, up there. You get through that, clear blue skies, no overhead supply. So guys like me are going to look at that and say, okay, time to get long, or add at least if you're not currently long, or if you're already long, I should say. All right, so BA I'm going to bring up on stockcharts.com. I already have a chart set up. We'll go over that in a moment. Small caps, IWM. Monthly chart. Down on the month so far. Let's clear this up. Remove all. Okay. All right, so here's the problem with the Russell 2000. Is that last month we were able to recapture support. The prior lower band of the rising uptrend channel, it was able to recapture. What did we do this month? We gave it up. Month's not over. For all I know, we make new all-time highs this month. We don't know yet. A lot can happen between now and the end of the month. But at current, it's not looking good. Weekly chart, not looking good. We have an outside reversal week. We've completely engulfed the prior week's move. And the problem here is that you take a look at these volume bars here to the right. That implies that you have a ton of resistance, a ton of prior action at those levels. And it's going to be tough, given the monthly chart, given the current market environment, for the small caps to rally to new monthly highs. So a tremendous amount of pressure above. Daily chart, a good day, a bullish reversal day. You know, can it rally for another day or two? Sure. But you have your Stokes, which are now below the 50 mark and declining. What normally you see are rallies which tend to fade. So if you're looking to buy the Russell, I would not be a buyer on a gap at the open, because there's a good chance that it fades by the end of the day. If you want to be a buyer, think about doing it right now in the aftermarket session with a stop loss right below the lows of the day, and you keep your loss small. And don't be too aggressive. Be nibble in this market environment. So that's my take on IWM. PYPL, which honestly is on my watch list. I like it. All right, so on a monthly basis, I'm pretty familiar with this chart already. On a monthly basis, we're back above, or we are above, not back above. We are above. We're all-time highs on PayPal. So what they've done on TrendSpider is they extrapolate out prior upper bands of resistance, and that's why you have upper bands of resistance on this chart, despite the fact that we've never traded here before. That's one of the values of TrendSpider. And if you like TrendSpider, there's a link below in the description area. Use that link and use discount code CT25Z. And that'll get you a discount on TrendSpider, 25% off. All right, weekly chart. I am affiliate of TrendSpider. Weekly chart. Beautiful chart. I mean, what's not to like here? You have a stock which is very close to all-time highs. We broke out on a monthly basis, broke out on a weekly basis. What did we do this week? We pulled back, we retested. In all probability, we are breaking out on PayPal. There's nothing not to like here. Daily chart. Now, on a daily chart, there is something not to like. But it can be overcome. Let's get rid of this, remove, and let's add this. This is what we want to see. You know, I would be fine if you said, Bob, listen, how would you trade this right now? I'd be fine with putting on a very small trade. Scratch the itch. Get it out of your system. Buy it. Use a stop right below the week's lows. Keep it loose. This market's rough, but I think PayPal is going to endure. When would I add? I would add on a close above this upper band of resistance. In fact, I'm creating an alert. I want to know when we close above resistance. Okay. Keep it active for a few days. And we're good to go. There it is. What else do we have? SDGR. SDGR. This one I'm not familiar with. This has got to be, is this a Corona play? I mean, this stock did nothing for a while and just blew up. Yeah, a lot has happened here. It's a bullish chart, obviously. Let's do a deep dive, and I'll give you my opinion. I mean, right now we're off the highs of the month. A lot of the easy money's been made here. Weekly chart. We broke out again this week. But we pulled back. Pissed me off. They won't let me create an alert there. Well, create an alert. This is what I would do. Okay. Keep it active for a couple of days. I would like it on a pullback because I know where I would put my stop, right below that support level. And I would also set up an alert because this could rebound. By the end of business tomorrow and break out. And that's all I really care about is a breakout. We'll keep it active for a day. Actually, you know, I'll keep it active for a few days. And we're good to go. Daily chart. I would defer to the weekly chart. It's just consolidating here. I would buy based upon our weekly analysis of SDGR or avoid. If it breaks down below that support level that we created the first alert at, we don't want anything to do with it. So those are my thoughts. SDGR. What time do we have? 6:45. We have a little bit more time left. Square. Looking very good. Looking very good. These payment processors are really killing it. So on a monthly basis, we've broken out. You know, obviously, there's still a lot of time to go. We could sell off. Weekly chart. The breakout occurred this week. We're at the highs of the week. We're at the highs of the month. So I'm very interested in the payment processors. They are showing relative strength, no doubt about it. I mean, the only financials I want to touch right now are the payment processors. So what we'll look for is a breakout on the week. And we're good to go. Yep, good. All right, daily chart. We're right above the resistance. It'll probably head up higher. You have a little bit of resistance back here. Right at around 80.74. I like the trade. I like the setup here. I think it looks really good. FRO. I'm not familiar with this company. So it's in a clearly a broadening uptrend channel. We have a reversal bar on the month so far. I think that we could come back down and retest the support level at 691. If that fails, we're coming down here to around about $6.25 to $6 per share, thereabouts. I don't see a trade here, either long or short at current. Weekly chart. Yeah. I think we're probably going to move lower. That doesn't necessarily mean it's going to break down. It just means we're going to retest the support level. It's just logical for it to occur. It's a probability. Daily chart. New daily low today. I think that you can get these shares at a better price. And if you take a look at, if you bought them down here at $6.25 to $6 per share, take a look at the historical volume at that level. Not a ton of it. So you're not going to have a lot of sellers back down there. So I prefer that price point, assuming that it holds. And then you can put your stop loss right below. If it breaks $6 a share, you're out. Small loss. And you move on. Stokes are looking good. You have a double bottom setup potentially forming here. So those are my thoughts. All right, let's bring up Boeing, and we'll leave off with Boeing. I was watching Boeing last week as a potential trade, but it just didn't hold up. So we'll begin with a weekly chart. Actually, let's go monthly, high level. There's a video I did on YouTube. I spoke about this head and shoulders setup, and we predicted the break. I think I even put it in the subject line if you want to go back and check it out on Boeing stock, ready to break or something like that. All right, so we held the 20-period moving average, which is rising, but still a bearish month. The one thing that you can be assured of is that there's no way in God's green earth they are going to allow Boeing to collapse. The ripple effect on the economy would just be disastrous. I mean, horrific. So we're holding the lower band of support on a weekly basis. I think that we're either going to have to break next week, either down or up. I know it's simplistic, but I mean, there's not much room here. We're at the pinnacle of this triangle formation, the apex. Daily chart. I think we rally. And I'll tell you why. The last time I looked at this chart, I was worried about RSI rolling over. That's why I put this up here, to reflect my opinion, so I memorialize it. That's no longer the case. What I'm looking for here on RSI is stability. I'm looking at this now as a cup handle formation. I'm looking for a breakout on RSI, perhaps even before you see a breakout on price. Now today, we flashed a bullish key reversal bar, and we did so on volume. So this is not mom and pop buying 100 shares of Boeing. This is institutional accumulation. Somebody sees value out there. So is this the bottom? You know, who knows? I don't know. But it looks like we're going to finish off the month, at least attempt to finish off the month, fairly strong. But you can't get aggressive with the shares until we close back above 130 per share. So short term, bullish on Boeing. Longer term, you know, the trend is still down, so therefore I have to remain bearish until that trend changes. Oliver, AYTU. Just the 15-minute chart? 15-minute results? Okay. You know what, Oliver, I'm going to need to pull back and first get a feel for where we're at, where we've been, and then we'll go to the 15-minute chart. Oh, brother. What'd you get me into here? Okay. All right, so it looks like I already went over this one in the past. And I set an alert. It never did break out. That alert expired I like the monthly chart. But we need to close above that 1.84 level. Got to do it. There's a lot of resistance up there. Yep, weekly chart, same deal here. All right, so now to the 15-minute chart. Now that I have a feel for where we're at. I don't like it. We've broken out above this resistance level not once, but twice, and both times we failed to hold it. So that's concerning to me. We need to have an ultimate close above this resistance level, and it's got to stay there. So it's concerning. So I wouldn't buy. I would need to buy on a breakout above, what is it again, 1.84? Yep. So I'm not optimistic about the 15-minute chart. I think that honestly, if you're not waiting for a close above 1.84, you're overthinking the trade, right? For you to have a good risk-reward entry point, you need to see a close above that level. And watching for a 15-minute chart, I think you're wasting time with it. Just wait for a daily close above 1.84. You get that, then you buy your stock. All right, just don't try to overthink the market, because each time we've broken out above, we failed. And ideally, really, you want to scale into this. So you may want to open up your trade on a close below 1.84, then add to it on a closing basis, daily closing basis on a close above 1.90, 1.91. That takes you above all of these prior holders or prior buyers, or previous buyers who are now going to be looking to get made whole. So you want these guys in the rearview mirror. After that, I think the shares go up higher. So I like the stock. I think you just got to be patient with it. Let it show that it's worthy of your investment dollars. And with that, folks, everybody have a great weekend. I hear the weather's supposed to be great here in the Northeast. And everybody have a profitable trading day tomorrow. Be well. Thanks for joining, and smash the like button. Smash the like button. Thank you.